There is something dangerous that happens quietly in trading. At first, most traders do not notice it. Because in the beginning, trading feels exciting. New charts. New opportunities. New possibilities. The trader feels motivated. Hopeful. Maybe even inspired. But slowly, something changes. Trading stops becoming a skill. And starts becoming emotional survival. The trader no longer wants to win. Now the trader needs to win. And this small emotional shift changes everything. Execution changes. Patience disappears. Pressure increases. Decision-making becomes unstable. And strangely, this usually happens without the trader fully realizing it. Because needing to win feels normal emotionally. Especially after losses. Especially after frustration. Especially when someone feels behind in life. Maybe the trader wants financial freedom. Maybe the trader wants respect. Maybe the trader wants escape. Maybe the trader simply wants proof that all this effort means something. And slowly, trading becomes emotionally heavy. Not technical. Emotional. This is where many traders begin collapsing internally. Not because they lack intelligence. Not because they lack strategy. But because pressure changes behavior. And behavior changes results. Today I want to talk about this deeply. Not aggressively. Not motivationally. Just honestly. Because this topic quietly destroys many traders. And most people never recognize it clearly. Chapter 2: Wanting versus needing. There is a very important difference between wanting to win and needing to win. Wanting is healthy. Wanting allows patience. Wanting allows structure. Wanting allows clear thinking. But needing creates pressure. And pressure changes perception. Now every trade feels personal. Every loss feels painful. Every missed trade feels emotional. And every winning trade feels like temporary relief. This is dangerous. Because the market becomes emotionally connected to your self-worth. Now you are not simply trading. You are emotionally negotiating with fear. And fear changes execution. Let's imagine two traders. Both use the same strategy. Both see the same setup. Both understand the same analysis. But emotionally, they are very different. The first trader says, if this trade loses, that's part of trading. The second trader says, this trade must work. Notice the difference. The second trader already carries emotional pressure before entering. And once pressure enters, objectivity disappears. Now small pullbacks feel dangerous. Small hesitation feels terrifying. The trader becomes emotionally reactive. Not because the setup changed. Because emotional attachment changed. Many traders believe trading is only technical. But trading becomes psychological when emotions become attached to outcomes. That is where execution starts collapsing. Chapter 3: The Psychology of Desperation. Let's talk honestly. Sometimes traders are not only trading charts. Sometimes they are trading emotions. Bills. Pressure. Comparison. Frustration. Disappointment. And once desperation enters trading, patience becomes very difficult. Because emotionally, the trader feels urgency. Urgency says, I need results now. And the market does not reward urgency. The market rewards structure. This is why desperate traders often force trades. They enter too early. They increase lot size emotionally. They revenge trade. They overtrade. Not because they are stupid. Because emotionally, they feel trapped. And trapped people seek relief. This pattern exists everywhere. Forex. Crypto. Stocks. Gold. It is not market specific. It is human behavior. Let's imagine a trader loses 3 trades. Now the account is down. Emotionally, pressure increases. Now the next trade feels important. Too important. The trader starts thinking, I need this one to recover. Now the trade carries emotional weight. And emotional weight destroys clarity. The trader watches every candle emotionally. Every pullback feels painful. Every fluctuation feels threatening. And usually, this emotional state creates worse decisions. The trader closes early. Or moves stop loss. Or enters again emotionally. And slowly, small controlled losses become large emotional damage. Not because of the market. Because pressure changed behavior. Chapter 4, Real Market Example, Gold and Emotional Attachment. Let's use a simple gold example. Gold creates a clean bullish structure shift on the 15-minute chart. Liquidity taken. Momentum increasing. Everything looks structured. The trader enters buy. But emotionally, this trader needs the trade to win. Why? Maybe earlier losses happened. Maybe frustration exists. Maybe confidence is already damaged. So now this trade carries emotional importance. Price pulls back slightly. Normal market movement. Very normal for gold. But emotionally, the trader cannot tolerate uncertainty. So what happens? The trader opens the 1-minute chart. Now small red candles appear. Emotion reacts immediately. The trader closes early. Then price continues upward exactly as planned. Now frustration becomes stronger. And this emotional cycle repeats. This is very important to understand. The market was not chaotic. The emotional state was chaotic. And chaotic emotions create unstable execution. Many traders blame volatility. But sometimes the real issue is emotional attachment. When you emotionally need a trade to work, you become hypersensitive. Every movement feels exaggerated. Every pullback feels dangerous. Every delay feels suspicious. This is not calm execution. This is emotional survival mode. And survival mode is extremely dangerous in trading. Chapter 5, History Lesson, Famous Traders and Emotional Pressure. This problem is not modern. It existed long before social media. Long before trading apps. Long before online gurus. Human emotion has always influenced trading. For example, Jesse Livermore, American stock trader 1877 to 1940. One of the most famous traders in history. He made enormous fortunes. But he also experienced devastating losses. Many historians and trading books describe how emotional pressure affected decision-making. Not lack of intelligence. Not lack of market knowledge. Emotional instability. This is why discipline matters so deeply. Because market knowledge alone is not enough. Another important thing to understand. Professional traders are not emotionally perfect. They still feel discomfort. They still feel uncertainty. The difference is not the absence of emotion. The difference is behavior under emotion. Amateur traders react emotionally. Professional traders observe emotion without allowing it to control execution. That is a major difference. And this skill develops slowly. Not dramatically. Slowly. Through repetition. Through journaling. Through self-awareness. And through accepting uncertainty honestly. Chapter 6, The Hidden Addiction to Emotional Relief. This next part is extremely important. Many traders believe they are seeking profit. But emotionally, sometimes they are seeking relief. Relief from stress. Relief from insecurity. Relief from frustration. Relief from feeling behind. And this creates emotional addiction. Now winning trades feel like emotional medication. And losing trades feel emotionally threatening. This creates unstable psychology. The trader starts forcing opportunities. Because emotionally, waiting feels painful. Silence feels uncomfortable. Patience feels slow. So the trader creates activity. Not because opportunity exists. Because emotion demands movement. This is why overtrading becomes dangerous. Overtrading is often emotional, not analytical. The trader is trying to change emotional state, not simply follow structure. And this cycle becomes exhausting. Emotionally exhausting. The trader feels mentally tired. Not because trading is impossible. Because emotional pressure never stops. This is why calmness is powerful. Calmness protects execution. Chapter 7: The Skill of Emotional Detachment. One of the most important skills in trading is emotional detachment. Not becoming emotionless. That is impossible. But reducing emotional dependence on outcomes. Very different. A calm trader can lose a trade without psychological collapse. A desperate trader cannot. This is why risk management matters psychologically. When risk is too large, emotion becomes too strong. And strong emotion reduces clarity. This is why many professional traders risk small percentages. Not because they are fearful. Because emotional stability matters. A trader who risks too much cannot think calmly. The nervous system becomes overloaded. Now every candle feels intense. Every fluctuation feels dramatic. And execution deteriorates. Healthy trading requires emotional space. Space to think. Space to observe. Space to accept uncertainty. And that space disappears when emotional attachment becomes too strong. This is why calm execution often looks boring. But boring execution is usually structured execution. Chapter 8: Practical Solutions. So how do we reduce this dangerous need to win? Not perfectly, but practically. First, reduce emotional pressure. Do not risk amounts that emotionally disturb you. If your position size creates fear, your execution will suffer. Second, accept losing trades before entering. This is important. Before entering, ask yourself honestly. If this trade loses, can I remain emotionally stable? If the answer is no, your emotional attachment is already too high. Third, stop measuring self-worth through trading results. A losing trade does not define intelligence. A winning trade does not define value. Trading results are probabilities, not identity. Fourth, focus on process. Did you follow rules? Did you manage emotion properly? Did you remain disciplined? These questions matter more than individual outcomes. Because strong process creates long-term consistency. Fifth, journal emotions honestly. Not only technical mistakes. Emotional mistakes. Where did pressure appear? Where did fear increase? Where did urgency appear? Over time, you will start understanding yourself more clearly. And self-awareness is extremely valuable in trading. Final chapter: The market rewards stability, not desperation. Maybe this lesson feels uncomfortable. Because many traders quietly carry emotional pressure. And sometimes, that pressure becomes invisible. The trader believes the problem is strategy. But underneath the surface, the real problem is emotional dependence on outcomes. Needing to win. Needing relief. Needing validation. The market becomes dangerous when trading stops being structured and starts becoming emotional survival. Because survival mode destroys patience. And patience is deeply connected to consistency. Calm traders can wait. Desperate traders force action. And forced action usually creates unstable results. You do not need perfect emotion to trade. No human being has perfect emotion. You simply need enough emotional awareness to prevent pressure from controlling execution. That is the real skill. Not prediction. Not excitement. Not hype. Stability. Quiet stability. the ability to remain structured while uncertainty exists. And slowly, through repetition, through patience, and through honest self-observation, that stability grows. The market does not reward desperation. It rewards structure. And structure becomes possible when you stop emotionally needing every trade to win. I will see you in the next lesson. Subscribe for more trading lessons.